I'm Michelle Caruso-Cabrera. I'm the Chief International Correspondent for CNBC, and I anchor a show called Power Lunch that airs from 1 to 3. So this panel will end on time because I have to get downstairs to do the show. Hello, good to see you. So, Lu Feng down at the end, hello. All the bios you can see online. Huang Yiping, sitting to my left, Dan Rosen, and XIANG, thanks for joining us. He's replacing somebody else who couldn't make it. So the title of this panel is Risks and Opportunities in China's Economy. I'm a journalist, so I love to focus mostly on the risks. And we talk to people on TV a lot about what the risks are that China faces right now. If I could summarize them really quickly, and I realize they're all kind of related, and let's go through them. Donald Trump, a risk to China's economy. China's ability to manage its currency, whether it's the inflows, the lack of them, or the outflows, the abundance of them. An internal financial crisis brought on by the banking system. We just heard that great presentation about what are the levels of NPLs. Even though perhaps not the 15% that the IMF said, potentially, it's a number of 8% would be pretty eye-popping to an American banker running a traditional bank here. And then the inability to reform the capital markets so that credit is driven not so politically, but to businesses that really need it and would be more productive. And like I said earlier, they're kind of related. Let's start with Donald Trump. Is Donald Trump a threat to the Chinese economy? Mr. Feng?
I don't know.
Mr. Yiping?
I don't know, but I think it's uncertainty. Since we don't know what he's going to do and what his policy will look like, it's very difficult to say whether or not it's a risk or it's a threat. But for us, obviously, we need to spend a lot of time looking at what he will do. The campaign language in terms of currency, in terms of trade war, could be troublesome. But at this stage, I think it's too early to say this will definitely happen.
What's the worst case scenario, do you think?
Trade war is something I think we should try very hard to avoid.
Dan, is Donald Trump a threat to the Chinese economy?
Well, look, Donald Trump is not just a threat, but has consciously taken on the status quo. United States, in the China relationship, worldwide. As a matter of course, China is more accustomed to dealing with policy change and uncertainty than the mature economies like the United States are. So in theory, you know, China has to deal with surprises and the risks of adjustment all the time anyway. And so they've been more practiced. They've been working out for disruption to some extent more than we have. So part of my answer is that we have a lot at risk here too, depending on how a lot of unorthodox ideas get implemented. That said, China, for its stability, is more dependent on growth at the margin every year than the United States is. More of the underlying private activity in America is reliable. It's going to be there. It's sustainable. China needs to make dramatic policy changes all the time and get them right, and has counted on an international environment which was copacetic and helpful to that for most of the past 4 decades. Trump is directly challenging and taking on some of China's assumptions, and that definitely presents some very stark risks to the Chinese outlook.
Have you been reaching out to potential Trump transition members? Do you have any sense of how monolithic their view is of China? We hear what Donald Trump says, but he's got a lot of people working for him. There's Peter Navarro on one hand, and other people who are less extreme than Peter Navarro.
Who's the Indian god that has like 8 hands? Because
Right.
there's a lot of different hands here. And of course, I mean, all of us, I think, are trying to take stock of who's going to be making decisions and providing advice and ideas. And it would be too soon to say in any new administration, but I will observe this, that the first time we have Twitter to use for assessing the priorities of the whole upper echelon of incoming officials. And I've had the interesting task, let me say, of reading through thousands of Twitter posts from the past year of a lot of people. And what I observe is at the topmost level of the Trump people who've been lined up, the people who have a cabinet chair in this administration, they are generally preoccupied with Middle East concerns, Islamic extremism, and do not voice much animus about China at the cabinet level. If you take it down one notch, at the senior staff, what we used to call the boys on the bus, who were advising the candidate what they could do to drum up support, there's a much more confirmed skepticism toward distrust of China. So we'll see how this works when you have a cabinet group of people who have other priorities, but their senior staff want to push them to take a more confrontational stance toward the People's Republic. This is going to be an experiment to see how that works out in a bureaucracy.
Yang?
Well, I think we're not going to have a trade war between U.S. and China. I mean, this 40% tariff increase probably was just a campaign rhetoric. President-elect Trump is a businessman, but now he's also a politician. I think we're quite now, by this time, we're experienced politician. And I don't think he's going to risk increasing substantially the cost of American consumers. Right? That doesn't make any sense, right, to make American consumers angry about this. Right? So probably on some products, on the basis of anti-dumping, and then there will be some increase of tariff. But the current administration did that too, right? But that didn't create a lot of problem between China and the United States, right? On the other hand, if President Trump can implement his promise to increase investment in infrastructure in the United States, that's going to create a lot of opportunities for Chinese companies. And if the United States can revive its economic growth, that's going to create a lot of demand for China. I mean, many people say if the United States is going to grow faster, that's going to be a bad news for China. I don't think so, because the U.S. is still the last resort of consumption. If the U.S. economy becomes better, then China is going to benefit.
Feng?
Yeah, thank you. Of course, this is a hypothetical issue, but it's not purely hypothetical because, as mentioned by Yiping Huan, and the President-elect Trump, and discussed a lot of issues, in terms of Sino-U.S. relationships, and says a lot of negative things in that area. Of course, we know what the president in power is going to do is not exactly what he said in the campaign, speech. How far, to what extent these two things will come together, it's a political issue, political science issue. But according to a study I read provided by expert of political science, it says on average in the history, 70% of what promised in the campaign by a president candidate will be delivered, will be implemented in his administration. Hopefully, the component of the speech by President-elect Trump in terms of negative, and measures against China will not be covered by the 70%. Hopefully. But of course, it's quite possible he will do something, in that direction. Then I think there will be two possibilities, One possibility, of course, everybody understands, if a new government will introduce something like tariff, or if, and make some disputes about Chinese currency, manipulate it, it will cause a lot of tensions, Of course, Chinese government, I assume, will argue, and fairly, for example, Chinese currency has not been manipulated. Then there's a lot of, and the exchange of the opinions and the arguments. In terms of tariff, then that will be because both countries are members of WTO. Then if one part impose, tariff, unilaterally, then it will become disputes of WTO. Then WTO, and dispute mechanism, settlement mechanism will play a role in judging whether it is correct. So I think that there's a lot of mechanism. We can wait and see. On the other hand, I think sometimes in China said, bad things can produce good results. If you look retrospect in the 90s, Clinton administration, also make a lot of difficult issues for Chinese government. For example, Carly and smiles because Carly know that much better than me. That most favored nation issues every year, China will pass that kind of, and the Congress and dispute. Then Chinese government finally decided we should beat up WTO accession. Okay, then we did a lot of painful adjustment to do reform, opening up. Okay, everybody says, China economy will collapse because opening up very weak economy to outside world will lead to disastrous outcome, but actually, finally, the outcome turned out to be not that negative. Okay, right. So in current circumstances, I think in my personal observation, there's still a lot of room, China can further reform, implement reform, and opening up, and to help Chinese economy further growth, catch up, but also helpful to the global economy, including United States. But a lot of political, economic difficult factors make it difficult to implement rapidly. So hopefully, I don't know, maybe, that could turn something, become the impetus for Chinese side, further speed up reform.
I asked the question in a very broad way for a reason to open up the conversation. I don't know, Dan, I don't know how much you're paying attention to this, but the way the Republicans are talking about reforming the tax code would dramatically change the way U.S. corporations are taxed. They would no longer pay on profits. They would pay on cash flow. And anything that was exported would have a tax rate of 0. Anything that is imported would be 15 or 20%, whatever the corporate tax rate turns out to be. So it could, in theory, do what Donald Trump, give him cover to say, see, I'm taxing imports, but it wouldn't be just against China. It would be against every country in the world, and it would be very, very strong dollar. Have you paid attention to that at all, or is that?
A little bit. I mean, really everybody should be who's interested in the American economy and the global economy, because shifting the United States to something that approximated a value-added tax system, a VAT system for border tax adjustment would be really colossally important to the functioning of our economy, right? And and how firms will need to position their global production chains to be competitive in light of a whole different set of incentives that are embedded in the tax system, the way it works. And so there are good debates, and many folks on the Democratic side of the House are interested in having a more efficient tax system that would make it possible to raise revenue easier, but for the federal government. So, this is maybe going to have fans on both sides of the aisle. We'll see. However, as you know, Michelle, it will almost certainly push up the dollar even further beyond what the tax cuts and other fiscal support being contemplated will do. And that will likely have an offsetting effect for America's global trade position. It's also not China specific. It's global in nature, not specific to China. And then finally, the National Committee, we just put out a study 6 weeks ago or so called Two-Way Street, looking at 25 years of US-China bilateral direct investment flows. And one of the things we came to understand better was that the United States doesn't have $60 billion of direct investment in China, has $230 billion of assets, General Motors, Disney, all this, that have invested in having productive capacity in China. True all over the world. If you suddenly pull out the carpet from under those firms and say, well, whatever logic you had in mind when you put billions of dollars to work in different parts of the world to build a global supply chain that was profitable in
Tax
terms that the
efficient.
New York Stock Exchange will appreciate and show you love at the end of the trading day, we're changing all that.
Yep.
They can't change their $230 billion of asset in China with the swipe of the president's signature. So it will change how we think about how the U.S. does business and treats firms and all these kinds of things. So pretty important. I think we should all be thinking about it. It's just a couple weeks old, really, this whole discussion about
Right.
this tax idea. And so not surprising that it's a new topic of discussion, but it needs a lot more attention.
But it does bring us, if you talk about the strong dollar, to the other issue about China's ability to manage its currency. Huang Yiping, you guys were so mean to the shorts today. You raised borrowing requirements, they got hammered. The two-day rally in the Yuan caught them all by surprise. What's been happening over the last couple of days?
Well, if you look at the policy decisions announced at the Central Economic Work Conference toward the end of December, the government policy on exchange rate is very clear. Essentially 2 points. One is increasing flexibility gradually, and number 2 is maintain some kind of stability. Now, if you look at these 2 points and just take the face value, you think it's not going to work, because on the one hand, you want flexibility, on the other hand, you want stability. But I think that combination of the 2 sentences essentially explains the logic that PBOC is trying to push, or the Chinese government is trying to push. Eventually, what they want is market-based exchange rate. So market forces should continue to play greater roles over time. But at the same time, you don't want to disturb the market too much by causing a lot of volatilities, both at home and overseas. And this is why we want to maintain some kind of stability, but at the same time, you gradually move toward a market-based exchange rate. So whatever we're seeing at the moment, some kind of intervention in the FX market, some kind of management of the transactions, and so on. I think we should all look at these through these 2 very important channels or angles. And part of the reason why we're trying to manage this so-called the expectation for depreciation is partly because we have some problems in the near term in the domestic economy, financial risks, volatility in the stock market, and so on. But you also realize Chinese people want to diversify their portfolio as they get richer. And that's why capital outflow becomes inevitable. But just to be very honest, if you look at the Chinese economy, look at the fundamentals, look at the growth, you look at the external account balance, you look at the foreign exchange reserves, you look at the external borrowing. It's very healthy. And this is why even people laugh, but the authorities often say there's no strong reason why the currency should devalue significantly. But that does not mean there will be no pressure to devalue. We know financial market is often driven by expectation, sometimes not driven by fundamentals. So this is essentially the task the PBOC has to manage. Fundamentals are important, which should reflect eventually the value in the currency, but at the same time, you want to maintain some kind of the stability. So by the way, I think we should all recognize 2 things in terms of exchange rate. Number 1, well, yes, at the moment we have seen some pressure for depreciation, but to a large extent, this is driven by the dollar, not by the RMB. Because you look at the value of the RMB relative to the basket, it's not actually depreciating, it's actually still rising against the basket. So whatever happens going forward to the dollar, and you suggested maybe dollar will get a lot stronger going forward, I think that probably would mean some further management would be necessary because that would cause changes in the RMB value. The second point we should also recognize is President-elect Trump said China is manipulating the currency, and I don't have a standard statement on this. But if the Chinese government is intervening in the currency at the moment, it is helping Mr. Trump, not against it. Because if we really just release all the controls at the moment, you all would understand that the currency will go down, not go up. So if we really want to push the Chinese government in liberalizing the exchange rate, just be very clear about what we should expect.
We've raised that point many times on the air at CNBC. The be careful what you wish for. If the yuan were to float in the open market right now, where do you think it would go?
That is very difficult, but the bottom line is it's not going to be free at the moment. Well,
so why
I mean,
ask?
it's very volatile, but I think I could say, as I said, in terms of the fundamentals, the pressure for the reason for depreciation, persistent depreciation, is not very strong. But in the near term, there is expectation for depreciation. So I don't know where it will end, but it doesn't look like in the near term, if you like just liberalize it completely, it does look like the currency will depreciate.
Anybody want to take a stab at if the yuan were to free float right now, where would it go? What would it be worth vis-a-vis the dollar?
That's very hard to predict.
All right, no, go.
So one thing we can say, right, is that whatever the answer is to that today, and we've already established that it is down, right? More than the government is comfortable with. Otherwise, the government wouldn't be intervening as aggressively as it's intervening right now. So whatever the current situation is, it merits very strong intervention and management, I think, are the words that Yiping used from Beijing, despite the fact that that means using up the country's foreign exchange reserves, at least for the short term, which creates its own different problems. Whatever the situation is today, it's going to get worse with each additional U.S. hike. That the risks are to the upside in terms of this dislocation between dollar and renminbi that is anchoring the market's thinking right now, right? So unless that changes, you know, the question we have to ask is, whatever it takes to maintain stability right now, can that be increased and increased and increased again several times in 2017? Or does that bring us to the point where that approach actually is not so tenable?
You want to answer your own question? The core of it, do they have enough money? Do they have enough to defend it?
If China's comfortable bringing its total forex down to just 6 to 12 months of import cover, the classic IMF answer to how much do you need, bringing it down to 1.5 trillion or maybe less, let's say, then yeah, sure, then they can buy another year of time to figure out what the long-term solution is to the fundamental problem here.
Well, management itself doesn't necessarily just meaning a use of foreign exchange reserves. That's only one part of the story. You're also seeing some capital account management. At the same time, you're also seeing the guidance to expectation. You actually find that during the last year or two, whenever the central bank actually works on communicating with the market, it actually helps to stabilize the market. So a series of numbers would be useful. But one of the reasons I also think we should look at, the reason why expectation for devaluation is so strong. On the one hand, Chinese people have lots of money. So when you have a domestic market booming, actually the pressure for depreciation actually eased. So when the stock market is up or when the property market is booming, capital outflow is not significant. And that probably means financial liberalization and creating more options for domestic investment would actually be very important. But that probably can only be done over the long run, not in the near term. The second issue, I think, is about growth deceleration. I mean, the reason why investors look at their investment returns, they become some kind of pessimistic when you see growth continue to go down and you don't know where is the bottom. That's, I think, something we need to have a solution.
Anybody want to add anything to that?
Well, we also need to look at the American side, right? The U.S. dollar has become stronger and stronger. Is that good for American economy? If the President-elect Trump's grand plan can be fully implemented, then most of the people suspected that the deficit is going to go up. That's going to put a lot of pressure, right, on the economy. In that case, probably we need a weaker dollar to stimulate economic growth in this country. And with that, probably the pressure on RMB can be released.
Lu Feng, anything you want to add?
Of course, this is a very complicated issue because the exchange rate is the most comprehensive relative price for opening economy, and such as China. Then you need to ask what fundamental causes underpinning the exchange rate movements in the recent years. I fully agree with Yiping and very comprehensive comments. I think most important reason, several aspects. Number one, I think because China's economy undergoing a deep, adjustment periods. Of course, a lot of reasons behind that. I think some issues discussed in the previous panels, in my opinion, and eventually China can, and going out from this deep, and very extensive adjustment periods, both because of the macroeconomic policy, most importantly, and because of the upcoming the reform and the measures, But under the current stage, it's the 12th period of the adjustment era, So then it is difficult, a lot of the opinions, expectations about, and China's economy is relatively weak. And number two, very important, because Chinese capital account are unprecedentedly opened, in recent years. In other words, Chinese ordinary citizens and investors enjoy, unprecedented level of the economic freedom, in terms of the capital account activities, But that also presents a challenge, because in terms of the current macroeconomic situation, how to interpret that? If you misinterpret that, or, and led by some kind of the not very accurate expectations, then maybe there's some short-term, capital, outflows, then it will impose on the pressures on exchange rate. Finally, very important, we all agree, it is the issue of the dollar's appreciation. Okay, right. So if you, as Yiping says, of course, over the last 2 years also, China's currency vis-a-vis US dollars depreciated maybe more than 10%. But if you look at the basket currency, CVIT, actually it only depreciated by 3.3%. So because I think US dollar, I don't know what's the weight of the US dollar in the total baskets, but usually I tend to believe must be, I don't know whether it's whether Yiping, 40% also, then you will see Chinese currency actually appreciated vis-a-vis other currencies, excluding dollar. Okay? Mm-hmm. So in other words, it's not issue of the China's current depreciation, but instead it is why the appreciation of US dollar. Then you are the experts in this country to know, why US dollar appreciated. My issue is the interest rate. Interest rate hiking indicates strong strength or, some kind of, I don't know, kind of awkward situation in this country. That, I think, final, how can I test, will come in this context. China gradually dealing with the current, I think, adjustment, whether China can manage, to get over the difficulties. On the other hand, whether American economists, can sort out, your structural problems, using the methods, and the recipes introduced by the President-elect Trump's policies. I think the final test will be given, in that context. So we wait and see what will happen in future.
There's a guy named Kyle Bass. He runs a hedge fund. He's very influential. And he says China's going to have a currency, is going to have a massive crisis because of its banking system, because of the level of non-performing loans. They're going to have to use up all the currency to recapitalize the banks on a massive scale. Whether that affects the United States, who knows? You have your closed-off capital account. But what about internally? How much internally are you worried about the banking system? We had the great presentation earlier about the level of NPLs and the debate over that. But you worried?
Well, I think, actually, this avoiding systemic financial risk is one of the policy priorities for this year. So a number of issues we needed to look at. The reason why policymakers now start to worry about the financial risk is, number one, because growth is slowing down. Whenever growth slows down, some risks show up. Number two, we are in the critical juncture of upgrading industries, which means the old industries will have to exit. The so-called constructive destruction could probably also point to some bad loans, assets, and so on. So for a number of reasons why systemic risks could rise now. But I think banking problem is probably one of the least problems. You look at, for instance, you mentioned about the capital outflow. That, in my view, is probably much more imminent and much more risky. We also look at, for instance, the corporate leverage, the asset bubble. We once had this equity market, and then we had the property market. All these problems are worrisome. Banking problem, according to Chairman Qin just showed you, even the much more realistic estimate or less optimistic estimate pointed to something like between 6 to 7% NPL ratio. The loan provision rate at the moment is about 3%. And so you look at the whole picture, I don't feel this is a very devastating story in the state sector. My own view is we need to worry about the financial risk in the areas I just mentioned earlier. But the Chinese story is slightly different. You look at the balance sheet of the consumer, of the enterprises, and of the government. The central government's total borrowing as a proportion to GDP is still below 20%. If we can combine that capacity with some kind of capital account control, even if there's some risk show up in some specific areas, I think we still can buy some times. So I don't think this risk is imminent. The critical problem is the flow problem, not the stock problem. So for instance, if we cannot stop inefficient lending by the banks, if the SOE zombie firms continue to pile up their borrowings, if the bubbles in the asset market continue to climb, then eventually we're going to have a problem. In the near term, in my own view, I think the government still can actually contain these risks. So all these problems comes back to the same question about what you do with SOE reform, and hopefully we'll see some progress this year.
We want to get to some questions, so if anybody's got questions, want to raise your hand. I see somebody over there, woman over there. Bring the microphone to her.
Because this panel is about risk and opportunities, so I want to raise a question about opportunities. So how do you guys think about the new source of China's economic growth this year? Because we've been talking about new normalization for a while, and we expect like decent but not exciting growth. But at the same time, the source of economic growth we used to take, for example, like consumer spending and also infrastructure, is kind of like disappointing. So how do you think about it? And what do you think it will be the new source in this year? Thanks.
She was ahead of our schedule. We should talk about that. But let me just continue on the non-performing loans. Today is very much like, say, between 1998 and 2003, right? So China is on the lower ebb of a business cycle, right? China also has business cycles like the United States. I think that's one of the problems of the Chinese government. It has never openly said that there are business cycles. We should say that, right? So that's why we need adjustments, structural adjustments. And one of the adjustments is to get rid of those non-performing loans. If you look at data, most of those non-performing loans are in those sectors with overcapacity and with a lot of inventory, that is the real estate sector and also the SOE sector, right? But the government has been aware of the problem. So last year, October 11, I remember, State Council issued a document to allow the new round of debt-to-equity swap, right? So how can you get rid of those non-performing loans? The best way probably is just a debt-to-equity swap. And the government has formally announced this. Last round of adjustment, the government did quite a lot on that. Like Michelle just said, the government spent a huge amount of money to recapitalize the banks. I don't think in this round, the government needs to spend money to recapitalize the banks, because banks, most of them, I wouldn't say healthy, but can get by easily, right? Even with non-performing loan rate of 8%, that's still small compared with last round. In last round, non-performing loans account for 30% of bank loans, right? And 1/4 of China's GDP. Today, that number is much, much smaller. And today, private sector has a huge amount of money, right? So they can participate in this process. And if we can use the debt-to-equity swap to reform SOEs, then that's going to provide incentives for private equity to participate in this process. And I would say many of those SOEs have good technologies, have good personnel. They only lack a good management. And if we can introduce private equity into SOEs, then we can change the management structure of SOEs. And that can, I think, it can boost economic growth again in China.
So that's part of the opportunity that she was asking about, right?
Yeah.
Okay.
Yeah.
Anybody else want to help her out with opportunities? Dan, any opportunity? Or go ahead.
I'll just say a couple of words. I think the critical issue we're facing in China today, we're all talking about a growth slowdown. So there is a discussion whether this slowdown is a cyclical or trend. My own view is it's mainly structural, which means we need industrial upgrading to continue growth. The reason why growth is slowing down is because the old industries like labor-intensive manufacturing and the heavy industry used to support the Chinese growth, now all lost competitiveness. We need new industries to kick in to support the growth. On that front, if you look around the country, you actually find lots of new industries. New industries could refer to new energy, new material, Internet Plus, and so on. A lot of new companies. Last year at the forum, I talked about the internet finance, digital finance, which is still booming despite some of the risks we saw last year or so. But these new activities rising. New activities also refer to these old products like household appliances, automobiles, machineries, and so on, but they upgraded in terms of value-added technology and so on. They become competitive at a higher cost. So you're actually seeing a large number of new industries emerging. Consumer spending, you mentioned earlier on, is becoming a bigger part of the economy. Service sector is also rising. So all positive changes are happening. The only problem at the moment, as I see, is that the new industries are not big enough to carry the whole economy forward at a relatively faster pace. And the problem I had, I think you look around the country, wherever the market forces are working effectively and entrepreneurs play active roles, industrial upgrading is happening smoothly. So you look at Shenzhen, there's no problem of industrial upgrading. In areas where you have lots of large SOEs, overcapacity, zombie firms, it's very difficult to innovate and to upgrade the industry. So my view is new economies emerging, but we come back to the same question, what do we do with the older industries if they lost competitiveness? Again, that comes back to the question of SOE reform.
So let me offer one other way to think about that question, one level up from the industry mix, the sector mix. Investment, consumption, and net exports for the country. I'll try to say this very briefly, but per what Yiping just said, there's a speed limit to how quickly we can move investment away from the sunset industries to these promising new sunrise sectors, which absolutely, as Nick already said in the previous panel, China's $8,000 per capita today. It's 30 years away from being Japan in the 80s. There's no reason why this has to stop in some zombie apocalypse right now. It doesn't. And it mustn't. We mustn't let that happen. But there's a speed limit how quick we can move that money over to new sectors. That means that investment cannot be growing today without loading the country up with bad, unrecoverable debt the way it did in the past. So investment is not going to surprise on the upside this year. It's got to be a little bit less contributive than it was last year. Last year, consumption growth was pretty hot in China, did a great job, carried a lot of weight. Problem is, a lot of that consumption activity we see, like everybody apparently buying extra cars all over the place, we're a little skeptical that we can rely on some of that consumption data that we're seeing. So we really can't expect to see consumption do better in 2017 than it did in 2016. Leaves us with the export side. Well, there we're back to the Trump question that you started with, and just how disruptive an international environment China's going to find itself in this year. But put those together, and it gets tougher to tell a positive China story versus where we were just a couple years ago, for me.
Okay, yeah. I'm so glad that, the panel, this session discussion will be end at the issue of the discussion of the opportunities, okay? But of course, it's dangerous, to ask economists to tell you, which specific sector will give you opportunity, okay? But I can tell you, and true, is two, issues. On the broad issues, China is still in the process of the urbanization. Millions of the people are moving to the urban areas, okay? And also the income are still growing over last, even most difficult adjustment periods in recent periods. The household income, disposable income, it is still growing at 7 or 8%, then it becomes, the market becomes bigger and bigger, Secondly, I can tell you several data. Over last 4 years, most difficult periods, a lot of the risks, a lot of the, and the crisis and projections. Actually, in 2012, I think here, exactly here, I discussed the issue. I discussed an article by Professor Paul Krugman. He says, 5 years ago, he says, will China break? A lot of issues discussed today also discussed in his article, but I says, okay, wait and see. Of course, we still hanging on that, So then you will see over the last 4 years also, you can see some data very clearly, as mentioned by Professor Huan Yiping, consumption, grow very strongly, such as the catering service, tourism, as well as, and the box tickets, cinema consumption are growing all more than, and double digits. And also, not only the surface, but also ordinary, and the consumption, like the car sales, over the last 4 years also. And average growth rate is something like 80%, So in other words, in traditional areas as well as emerging areas, and the surface as well as manufacturing sectors, actually there's still a lot of areas are growing very rapidly. Then it's up to the entrepreneurs and the firms to find out, which area is more promising in future. But in order to tap out the potentials, I think very important. China and the States, two biggest economies, and should collaborate rather than, regarding the opposite side as a rivalry. Thank you.
Well, thanks so much. This has been terrific. We've come to the end of our time. We were supposed to end about 5 minutes ago. So if you guys are sticking around, I bet you'll be inundated by people afterwards who'd like to ask questions. Thanks so much. I was honored.